Thanks for the introduction and good afternoon, everyone. There was a very insightful discussion on secondaries. We've actually seen an uptick in secondary stock purchases in VC space in 2024, and that's partly driven by global private equity and sovereign wealth funds who are looking to increase the capital deployment in the country. For those who are new to Preqin, we are a private markets data and analytics platform used by over 200,000 professionals globally. With over 20 years of experience, we have LPs and GPs around the world who rely on our data to streamline the way they raise capital. Okay, I need to go move in front, guys, looks like. To streamline the way they raise capital, source deals and investments, screen funds, as well as understand the performance. You can now scan this QR code on the screen to get a copy of today's presentation, as well as some of our recent research reports. You'll also find a copy of our latest performance benchmarking report on AIF, which we publish in partnership with IVCA. Let's start with a quick overview of private capital markets in APAC. APAC-focused private capital AUMs stood at $3.5 trillion as of June 2024, and that is a decline of about 6% from 2023. The decline was primarily driven by venture capital, which saw a significant drop of about 10% in AUMs. However, despite this decline, as we can see in the pie chart, VC continues to dominate the market with almost 50% market share, followed by private equity in dark blue at 33%. On the other hand, if we look at India, India-focused private debt AUMs have remained relatively stable at around 135 billion over the last 3 years, and we've been hearing it a lot over the last 2 days. That has been driven by investor confidence in private equity and venture capital markets in India. Though private equity and venture capital continue to dominate the private markets in APAC and in India, we cannot not notice the activity in private debt. If you look at the chart on the right, India-focused private debt AUMs almost doubled in 2024 as compared to 2019, and that is far outpacing growth in any other asset class, including venture capital, which saw a growth of about 65% during the same period. Now, we've been talking a lot about mid-sized businesses and growth, so this impressive growth has been driven by India's urgent need for financing, especially for mid-sized businesses, and the funding gap that has been created due to banks' conservative lending practices. We now see private lenders are stepping in to fill the void and offer more flexible financing solutions. In addition, regulatory improvements also have played a key role here. For example, introduction of insolvency and bankruptcy code has expedited the insolvency resolutions, further boosting investor confidence. In 2024, we saw Edelweiss Alternatives, a special situation fund, which closed at $1.3 billion above the target close of $1 billion. If you look at the chart on the left, which is the country split for APAC-focused private debt AUMs, India has established itself as a regional leader in private debt, surpassing AUMs of all other countries in Asia. In fact, as per our data, private debt AUMs for India-focused funds as of June 2024 were almost the double of Greater China. Starting with fundraising now, looking at the asset class split for India as well as APAC, Globally, the fundraising has been impacted due to factors like geopolitical concerns, interest rates, and overall cautious investor sentiments, and Asia has not been spared either. If you look at the chart on the left, APAC fundraising hit a decade low in 2024, both in terms of number of funds closed as well as total capital raised. And we saw pretty much all asset classes raising less capital as compared to 2023. Venture capital, which is the pink portion of the stacked bar chart, was the main driver for decline, and we saw venture capital funds raising 55% less capital in 2024 as compared to 2023. The only exception that we saw was infrastructure, which is the orange portion of the stacked bar chart, which raised almost 3x of 2023, and that was driven by few large funds such as KKR's 6.4 billion and Stonepeak's 3.3 billion Asia infrastructure funds. Moving on to India now. India, though not completely spared of the global downturn, saw relatively stable fundraising, and as compared to 23 with an overall decline of about 13%. Now, this is marginal. If we look at APAC, which was down almost 27%, and globally we were down about 24%. However, unlike APAC, where venture capital was the main driver for the decline, in India it was actually the savior. We saw India venture capital funds raising 30% more capital in 2024 as compared to 2023, whereas VC, which is the blue portion of the bar chart on the right, raised almost 50% less capital in 2024. Now, continuing with fundraising trends, but looking at the regional split, we see most country-specific funds struggle to raise capital in 2024, though China, which is the dark blue portion of the stacked bar chart, is the key driver of decline, continues to be the key driver. Investors have been grappling with the structural concerns about Chinese economy as well as its international relations, and as a result, there is hesitancy when it comes to deploying long-term capital in the country, with the risk that, with the fear that it might be more difficult to exit the investments in medium to long term. And we continue to anticipate outflow of foreign capital from China as domestic capital plays an increasingly dominant role. Overall, I'd like to bring the focus to the pink portion of the stacked bar chart, which is Pan-Asian funds. And we see that the demand of Asian regional fund has continued to grow, and this is driven by investors' strong preference for diversification. In 2024, Asia regional funds actually accounted for about 40% of the capital raised. This was 28% in 2023. For reference, this was just 8% in 2020. Some of the big funds that we saw closing in 2024 in this space was CVC Capital Partners Asia Fund, which closed at $6.8 billion above the target close of $6 billion. And of course, we spoke about KKR, $6.4 billion Asia Infrastructure Fund. We heard that a lot yesterday about consolidation, and we see that it continues in the market. If you look at the line chart, graph in the chart, which represents the total number of funds closed, and our data showcases that APAC fundraising will substantially favor established manager of Asia regional funds who are able to drive the deal flow towards popular markets with opportunities in future. So that was a quick overview of Asia market. We will now focus on private equity and venture capital, the two most dominant asset classes both in Asia as well as in India. Starting with deal flow, as it's always a very good indication of the market. Looking at the private equity deal flow, which is the chart on the left, overall private equity deal volumes in APAC were maintained, and that's thanks to Japan. We heard about Japan in the previous session as well, where we saw an activity up by 30%. Japan has emerged as one of the most attractive markets when it comes to fundraising as well as deal making for obvious reasons, which is weaker yen and accommodating interest rates, defying downtrends everywhere else in the region. When it comes to venture capital, that's the chart on the right, it clearly has much higher deal volumes because of small ticket size, and overall, we saw a decline of about 18% in the deal volumes. This decline could have been much worse if not for India, that saw a growth of about 17% in VC deal volumes in 2024. Zooming into private equity now, split by industry asset classes. Though the number of deals, which is the stacked bar chart, increased marginally in 2024, we saw notable declines in sectors like healthcare and consumer discretionary. These sectors have traditionally seen a good growth post-COVID, which seems to be moderating now as per the data. Looking at the chart on right, which is the India private equity deal market, the sector continues to be dominated by consumer discretionary. The asset class continues to be dominated by consumer discretionary, healthcare, information technology, and business and financial services. However, if we look at the line chart, the deal volumes have remained stable at around $13 billion over the last 3 years. The spike that we saw in 2022, we all know it's coming from HDFC Bank's $61.7 billion buyout of HDFC corporations in 2022. India's appeal to the foreign investors has grown significantly in the recent years, and we are seeing foreign LPs increasingly partnering with GPs with local presence to tap onto their deep market knowledge as well as well-established networks. India's corporate sector, we all know, has grown significantly in the recent years as well. It's driven by strong consumption demand as well as robust nominal GDP growth, and this has driven demand for capital for companies in India. When it comes to private equity, the more concerning issue probably is continuous weakness in exits. At APAC level, which is the chart on the left, even though the exit volumes have increased for the last 3 years, what we see is overall exit activity has contracted or has continued to contract, and that is partly due to lower valuations because of higher discount rates. We're also seeing that GPs have been successful with the smaller transaction, as they are typically easier to execute as compared to the larger ones, especially given the challenges we are seeing in valuation as well as the overall deal-making environment. And many large exits are potentially postponed till GPs reach the valuations that they consider fair. If we look at India, which is the chart on the right now, we saw an overall decline in deal volumes as well as value PE exits in 2024, though we did see some notable exits. For example, there was a 1.3 billion trade sale of Bharat Serum to Mankind Pharma, and also $1 billion secondary buyout of Manjushri Technopack by PAG. So we are seeing some big exits as well. Coming to venture capital now, and by the industry split, APAC is underperforming 2023, both in terms of value as well as volume, actually hitting the lowest since 2019. Clearly, the region has not been spared of global macroeconomic and geopolitical concerns. Plus, of course, there is China, which has a major impact here, given the share it has in APAC venture capital market. Deploying capital into China represents a deeply contrarian view at this point, and it may see interest from some investors. Chinese technology companies, for example, are trading at deep discounts to the US peers and may prove to be profitable in medium term. Coming closer to home now, which is the chart on the right, the story is very different. After seeing a decline of since peak of 2021, India VC activity actually saw a rebound in 2024, defying the trends everywhere else in the region. In our opinion, investors seems to have adjusted to the new investment environment, focusing on high quality assets and emphasizing profitability, leading to a renewed optimism in India's long-term potential. Consumer discretionary and information tech have traditionally dominated the sector, and we expect that to continue given a strong domestic consumption story as well as young tech-savvy population. Everyone wants to know about exits because that's how we get their money. Investors get their money back. When it comes to VC exits, Asia saw the largest contraction globally, and again, China, which is the blue portion of the bar chart on the right, has a big, big role to play here. You can see the continuous decline. In fact, the number of exits that we saw in China was less than 5% of the exits that we saw from China in 2019. So that's a huge decline that we are seeing there. On the bright side, India has held up relatively well as compared to other markets in APAC. As per our data, while overall Asia declined about 44% in VC exits, India saw a decline of about 18%. Decline is there, but is respectable. Taking a closer look into India and where did the exits come from, we saw an exit activity picking up in second half of 2024 after a relatively slow first half. And we also saw, we had an amazing panel on secondaries just before, we saw an uptick in secondary stock purchases, which was almost 3x of 2023, with trade sales, which has traditionally dominated VC exits in India, saw a decline, though it still contributes a good proportion. In addition to other reasons, we are seeing global private equity and sovereign wealth funds who are sharpening their focus on India and have increased the capital deployment, boosting these secondary sales, as well as providing a path to exit for early and growth stage funds. So we've looked into previous slides on VC in India has remained resilient, whether it comes to fundraising, deal making, or even exit activity. We'll spend next few slides understanding why is that the case, including spending some time on performance as well as investor views on VC. We all know, though diversification is always a very strong reason for investors to foray into private markets, what really attracts investors to venture capital is its high profitability, its returns. The chart we are seeing on the left is from the report that Preqin publishes as mandated by SEBI and in partnership with IVCA as one of the appointed benchmarking agencies. Here we are looking at median IRR, returns for India-focused funds over 2013 to 2021 vintage, and we see venture capital, which is in the pink bubble, takes a top spot. What's interesting to see is VC usually has been an outlier on the risk spectrum. However, as per our March report, VC has offered good returns with the risk that were on par with private equity. We've been talking a lot about divergence, so we decided to even look at the regional view of performance. If you look at the regional view, Indian VC, which is the green bubble on the bar chart, has offered significantly higher returns as compared to the regional peers in APAC, with risk levels actually on par with developed markets of Europe and North America. Now, this explains the resilience VC in India had shown despite the softness everywhere. Moving on to our investor survey now, which is always an anticipated one by everyone. Looks like the investor optimism is coming back, and we may see an increase in VC fundraising in the coming year, given almost 77% of the investors are either looking to increase or maintain their capital commitment to venture capital, outweighing those who are looking to cut the commitments. And we have 3 years of data here, so you can see that's an improvement in intention from 2022 and 2023. In terms of the return expectations, that's the chart on the right now. Lower mark-to-market valuation since 2021 meant VC failed to meet investor expectations. However, investors are seeing past contraction as silver lining, meaning the asset class is well positioned to deliver for future performance. And as per our investor survey, this was done in November, 42% of the investors believe that their portfolios will actually perform better in 2025, and this is as compared to only 10% who believe that their portfolios will actually perform worse. Coming to the investor concerns now, the VC industry has faced several challenges over the last year, and we see investors continue to see exit environment, asset valuations, as well as interest rates as key challenges to the return generation. However, there seems to be some relief. We are seeing all the percentages coming down here, and investors are more optimistic heading into 2025. Preqin forecast 2024 has carried through many themes we saw in 2023, which is being reflected in the recent performance of the recent vintages. If history is any measure of what is to come, we may be coming to an end of a more challenging time for the asset class. And based on our survey, venture capital in APAC is set to outperform all other asset classes over the long term, despite some near-term risks. And this is my favorite slide for today. Finally, India has emerged as the key region of interest in emerging markets across all asset classes, especially venture capital, with 60% of investors ranking India as the best market for VC opportunities in next 12 months. Next is Southeast Asia. Clearly, investors are APAC in markets are attracting a lot of private capital investors to the region as they want to capitalize on fast-growing economies as well as favorable demographics. So, quickly recapping today's presentation, demand for Asia regional funds continues to grow amidst investors' strong preference for diversification, and we expect APAC funding landscape to substantially favor established managers of Asia regional funds in foreseeable future. Private debt, AUMs in APAC are set to grow, see a substantial growth in next 5 years, and India will continue to play a significant role in that. And finally, India is now the most favored emerging market for investors across all asset classes, especially venture capital. The structures underpinning India's investment story are likely to remain robust, and they will support that future growth. With this, I conclude my presentation. All the insights that in today's session are powered by Preqin Pro data. So if you're interested to know more, please do drop by our booth and we'll be happy to share more. Thank you for listening, and I look forward to interacting with some of you in the networking sessions. Thank you.